Imagine waking up tomorrow to headlines screaming the country is drowning in debt. Nothing looks different. Your bank works, your salary arrives, shops are open. So who exactly is this debt owed to? And why does it matter if life feels normal? Here's the uncomfortable truth. Most people arguing about national debt don't actually know who owns it, and that misunderstanding quietly shapes elections, markets, and the future of money itself. This isn't about abstract numbers. It's about power, leverage, and who gets to blink first when things go wrong. Right now, governments around the world owe more money than at any point in history. The US alone is deep into the tens of trillions. Japan's debt is more than twice its entire economy. Europe never really stopped borrowing after the last crisis. And yet, no one is showing up at the door asking for repayment. That's where the confusion begins. Most people picture national debt like a giant credit card. Borrow too much, max it out, eventually someone cuts you off. But countries don't borrow like people. They borrow in layers. And the owners of that debt are not who you think. Let's start simple. When a government runs a deficit, it issues bonds. These are promises. I'll give you your money back later, plus interest. Those bonds get bought. But by whom? Here's the first surprise. A huge chunk of national debt is owned by the country itself. In the US, nearly a quarter of federal debt is held by government agencies, Social Security, Medicare trust funds, federal retirement programs. It's the government owing money to the government. That sounds circular, because it is. When you hear politicians say, we're borrowing from future generations, this is part of what they mean. Those trust funds bought government debt, expecting future taxpayers to make good on it. So, already, the debt isn't some foreign monster. It's internal bookkeeping with real consequences later. Next layer. Domestic investors. Pension funds, insurance companies, mutual funds, banks. These institutions don't buy government bonds out of patriotism. They buy them because they're considered safe, boring, predictable. If you manage retirement money, you can't gamble it all on startups and crypto. You need assets that won't vanish overnight. Government debt fills that role. So when a country borrows, it's often borrowing from its own workers' retirement savings. Again, uncomfortable. Now comes the part everyone fixates on: foreign holders. China, Japan, oil exporting countries, global central banks. Yes, foreign governments and investors own a meaningful slice of national debt. In the US, it's roughly a third of publicly held debt. In some smaller countries, it's much more. This is where the fear stories come from. What if they dump the debt? What if they weaponize it? What if they demand repayment? Here's the quiet irony. Foreign holders actually have much power to blow things up without hurting themselves. If you own trillions in another country's bonds, dumping them crashes the bond price, which means you take massive losses, and you destabilize the global system that made your exports valuable in the first place. Debt ownership creates mutual hostage situations. That's not stability, it's a standoff. Now, let's reveal the biggest owner of national debt today, the one almost never discussed honestly: the central bank. Over the last 2 decades, central banks went from referees to major players. After the 2008 crisis, and again during the pandemic, central banks stepped in and bought enormous amounts of government debt. They did this through programs with technical names: quantitative easing, asset purchases. Translation: they created new money and used it to buy government bonds. In some countries, central banks now hold more government debt than any foreign nation ever did. So who does the government owe money to? In many cases, the institution that can print the money to pay it back. That sounds like a cheat code, and for a while, it feels like one. If the government owes the central bank, and the central bank sends profits back to the government, interest payments start to look like accounting theater. But this is where the math gets uncomfortable. Debt doesn't disappear just because it's held internally. It changes form. When central banks hold debt, the risk doesn't vanish. It moves. It shows up as inflation pressure, currency weakness, asset bubbles, distorted markets that no longer signal risk properly. That's the trade-off. You avoid a visible default, but you pay in less obvious ways. Now let's confront the biggest myth. The idea that national debt is like household debt and must eventually be paid off. Most governments don't plan to pay off their debt ever. They roll it over. Old bonds get replaced with new ones. The system depends on continuous trust that future bonds will always find buyers. As long as the economy grows, as long as inflation doesn't spiral, as long as interest rates stay manageable. That's a lot of as long as. Here's where ownership suddenly changes everything. When debt is mostly domestic, governments have more flexibility. They can tax, inflate, regulate. When debt is heavily foreign-owned, options narrow. Currency crashes hit harder. Capital flight becomes deadly. And when central banks hold too much debt, credibility becomes fragile. Because the moment people believe money is being created to cover political spending, trust cracks. And trust is the real currency here. Let's zoom out. National debt isn't just a financial instrument, it's a mirror of political choices. Who owns the debt tells you who bears the risk. Retirees, taxpayers, foreign savers, future workers. It also tells you who gets protected first when things go wrong. History is blunt about this. Governments rarely default outright. They inflate, they restructure quietly, they change rules, they stretch timelines. The debt gets handled, but someone always pays. Usually not all at once, usually slowly, quietly. That's why debt debates feel abstract until they suddenly don't. When inflation erodes savings, when pensions fall short, when interest payments crowd out public services. So the next time you hear a politician say, "We owe it to ourselves," or "Foreigners own our debt," or "The central bank can handle it," remember this. Debt ownership isn't a trivia fact, it's a map of pressure points. And right now, that map is changing fast. Central banks are pulling back, interest rates are higher, governments are borrowing more, not less, which raises a final, uncomfortable question. If trust is what keeps national debt alive, and trust is being stretched from every direction, who actually owns the risk when everyone insists they don't?